Hello and welcome to episode 833 of Fintech Insider. I'm Laura Watkins, Director of Media and Marketing here at 11FS. We are recording this episode right before International Women's Day, so to celebrate, I'm joined by an all-female panel who are here to break down the week's biggest news stories in fintech and financial services, and also some stats about the female experience in the industry. Firstly, I'm delighted to welcome my co-host, Rachel Pandyan, Ventures Product Lead at 11FS. How are you, Rachel?
Yeah, doing well. We are busy as always in Ventures, just wrapped up on one project in the retail space and moving straight onto another project in the commercial space. So lots to do and some really exciting stuff coming out of our team.
Exciting. Always great to be busy. And it is a pleasure to welcome back to the podcast my former colleague, now with an exciting new job title, Sarah Kocianski, CEO at Fintech Wales. Welcome back.
Thank you so much for having me. As always, I'm always happy to be here.
And we are very glad that you can join us. Tell us more about Fintech Wales and your new fancy role.
Yeah, no, it's really, really exciting. And I'm really, really honoured to be in this position to take this role on. I'm stepping into some very big shoes. The incredible Sarah Williams-Gardner, who was our CEO for the last few years, has now moved into the chair position. So I'm taking on the CEO role. For those who don't know about Fintech Wales, we are an independent membership association, and our role is to champion fintech and financial services across Wales. So we do a few things, but essentially we have four main pillars. Those are skills and talent, funding and investment, ecosystem and community, and promotion and amplification. And our role really is to help fintechs here in Wales succeed in every way possible. Yeah, so that's what I'm going to be doing from now on. And as has been pointed out, I'm in an actual office for the first time in a very long time, which is equally exciting.
Amazing. Well, thank you for joining us. I think it's a perfect role for you. You've been, championing Wales and fintech for a long time, and putting the two together is a perfect fit. So, really excited to hear more about what you are getting up to in the weeks and months to come. And finally, last but not least, we are joined by Phoebe Kitchen, Vice President of Growth Equity at Inovia. Thank you so much for joining us, Phoebe. Can you tell us a little bit about yourself and what you do?
Yeah, super excited to be here. So thanks a lot for having me. So in terms of a bit about me, so as you said, I'm a growth equity investor at Inovia Capital, based here in London. So a bit of background about Inovia. They're one of Canada's leading VC funds with over 2 billion AUM, where we're passionate about helping our entrepreneurs build truly international companies. So we're a generalist fund, investing primarily in B2B software and marketplace business models, and pride ourselves in particular on our operational expertise. So the main partner in London is Patrick Pichette, who used to be the CFO of Google for a few years. And we also have people of sort of similar caliber elsewhere in the partnership. From a personal perspective, I lead most of our fintech coverage work, which is why I'm really excited to be here with you today and be part of this discussion.
Amazing. Well, it's great to have you with us. And thank you so much for both of you for joining us. We will start the show very shortly, but I would like to remind you all, After Dark is coming back to London. Join us at the Village Underground on Thursday, the 21st of March to watch David Breer, Jamie Campbell and Georgie Frost record a live episode of Fintech Insider News. You can find all of the details and secure your spot right now at 11fs.com/afterdark. It's my favorite of the events that we do. It's so exciting to bring this podcast out of the studio and in front of an audience. And it's just really good fun to bring the people that listen to us and listen to this podcast, sort of privately into a room and get them all networking and talking together. It's just a really great fun event. However, alternatively, if you can't get to London on that day, or you happen to be listening to this in the future, you can also sign up to our mailing list to be one of the first to hear about our other events. So visit 11fs.com/community for more information. And with that, let's jump into the news. So our first story this week reveals new research from MasterCard reveals just a quarter of women feel financially supported in the workplace. So ahead of International Women's Day, MasterCard examined what financial empowerment means for women across Europe. The results show that only 25% of women have supportive workplace policies such as equal pay and favourable workplace pension options. Additionally, 41% of women refrain from raising financial issues due to privacy concerns, and 29% are worried about the judgment they might receive. There is also gender disparity when it comes to investments. Only 38% of women are confident in their understanding of investing, compared to 54% of men. So I'm joined by an all-female panel here today. Does any of these numbers surprise anyone? Rachel, initial thoughts on these numbers?
I mean, unsurprising. I also find just the kind of, when I think about all of the things that I deal with, like as a woman, and like I just don't even consider bringing them into the workplace. And so I'm not surprised that people feel uncomfortable about raising them. Particularly, we're talking about, gender disparity when it comes to investments. It's never mind investments, the pensions that we all contribute to in the private sector, and the fact that there's a huge gap for auto enrollment in pensions. I think I've got my stats up somewhere, but there's like a 35% pensions gap, which just, it grows and grows as we scale in our careers. And so I think knowing that, feeling already that the system isn't set up to help us succeed, why then, like, it feels like you're almost trying to ask for extra support when you do want to change things. So sadly, not really surprised on this one.
Agreed. So we asked our community how optimistic that they are that financial services will hit the UN Sustainable Development Goal to achieve gender equality and empower all women and girls by 2030. In probably a surprise to no one, 51% said they were pessimistic, 31% said they were optimistic, and 18% are not sure. In fact, I'm surprised that the 51% number on the pessimism side was not higher. Sarah, what are your thoughts on this whole issue of sort of financial empowerment?
Oh, we've had this conversation so many times before. I think I've had this conversation on this podcast several times before. It's not a surprise. There's a couple of things that stood out to me, and it might just be that the way the survey was done or the way that the results have been phrased. But, 25%, only 25% of women have supportive workplace policies such as equal pay. Well, isn't equal pay a law in most of Europe? So that's something that needs digging into. And I know that equal pay is a law, and I know that actually in a lot of cases it isn't actually implemented because of some, skullduggery that happens in the background. The other thing that's interesting to me is that the raising financial issues due to privacy concerns. I'm like, who are they raising them with? Is it with their employers? They're worried to say they need more money. Like, I'd like a bit more detail on that. But overall, no surprise. The interesting thing and the sort of positive, I think I take from this is that the rest of the data says they showed that a lot of the women have a high understanding of savings and budgeting. That's positive sign, but it's also no surprise. If you look at most of the world, who runs households? Men may think they run households. Women run households. Women know how much school shoes are. Women know how much the food shop is. So it does show that I think perhaps my point about that is that women sometimes undervalue their financial understanding, and they should be more confident. I imagine if you ask this survey to men, you'd get completely different numbers, even if the actual understanding and sort of expertise was the same. But yeah, all in all, it's not a surprise. I'd like a bit more background to the data, but the long and the short of it is what I've said before, and I'll say again, particularly when you're talking about equal pay, publish salaries, put salary bands on job descriptions, let people know how much they are worth. Don't hide it, because if you hide it, we all think you're trying to get away with something, even if you're not.
Yeah. And I think as well, like, a salary statement is one thing, but then what does that mean if you want to start a family? And I've never ever thought of this. I've always been like, I'm going to get my career sorted, and I'll think of it this way. But actually, it's something you have to schedule, because what if you're on track for, if you're going for directorship at one of the big banks, what does it look like in terms of your time commitment, like what you're able to give, and therefore, like, are you able to step away from that rat race to do the things that you want to do outside of work? And it's actually how many women are sacrificing passions that they have outside of work because they're afraid of the ramifications and that it takes them out of the running. And it's like, yeah, you publish your salary brand and I sign up for it, but then if I opt out of doing more than I'm expected to get to that next step, like, how do I get compensated for that in the future? That I just don't see that being very clear in a lot of workplaces. From a VC perspective, Phoebe, I'd be interested to hear your thoughts, because I'm sure you've seen some really interesting companies as well as ways of working in your way of part of the world.
Yeah, definitely. And I think just as like an adjacency to that, I think the stats around female participation in day-to-day retail investing and financial investing is super interesting. Just to echo some of Sarah's comments, I think there's been a real role transition from 20 plus years ago. Females sort of owned the household budgets, were one in charge of data of sort of broader financial planning. And now that's really changed as more women have entered the workforce. But then sort of fundamentally, a lot of the issues are sort of the same. And I think the word is really about confidence. So what confidence means to a woman is quite different for what confidence means to a man, in terms of women often undervalue their confidence and ability to do things versus men who are often the opposite. And I think looking ahead, I think it's a really positive for sort of Gen Z and sort of millennial generations as they sort of grow up and, as you said, get higher positions, etc., within workforces and become more empowered to do the financial planning, etc., themselves. And then I think the other lens of that is always like what women are looking for is fundamentally often quite different. So it's like prioritizing, longer term gains. So things like savings accounts, having more of a diversified risk profile versus men who are traditionally a bit more shorter term in their financial planning or sort of investment strategy that they're looking for. So I think the sort of the mix of like what women even want is different from investing, which probably aren't necessarily like reflected in some of these numbers because obviously it's pretty blended. So that's a bit about my experience on the sort of perceptions on some of the sort of day-to-day investing side.
Thank you so much for that, Phoebe. It's also really nice to hear a kind of positive spin at the end there of how we can take this forward and kind of empower Gen Z in the workplace going forward, and also just generally managing their finances better. Potentially, speaking of which, our first kind of main news story for today follows online pension provider PensionBee and challenger bank Monzo announce US expansion plans. So in the last week, two big UK fintechs have announced plans to move into the US market, covered in both Fintech Futures, FinExtra, and plenty of other places besides. Firstly, Monzo, whose valuation hit $5 billion following their latest funding round led by Alphabet's investment arm Capital G. Having appointed Connor Walsh as their US CEO last year, and now with investors including the Google-owned Alphabet, Monzo are gearing up for a new push into the US after an unsuccessful attempt in 2019. And in similar news, online pension provider PensionBee has entered into an exclusive partnership with an unnamed US financial organization. This new deal will see it ramp up its operations in the US with ambitions to exceed the UK within a decade. Since its launch in 2014, PensionBee now serves 250,000 customers with $4.4 billion of assets. We caught up with Romi, Savova, CEO at PensionBee, for more information.
I'm excited to share that PensionBee is working with a large US-based global financial partner to expand our award-winning customer proposition to the US. The US has the world's largest defined contribution pension market, where many consumers still struggle to prepare adequately for retirement due to an array of confusing and difficult-to-use investment options. Our straightforward approach to online retirement savings will enable consumers to easily consolidate and roll over their 401k plans into a new individual retirement account, helping them save for a happy retirement. Given the context of the enormous US market opportunity, we see the potential for the US business to grow rapidly, becoming at least the size of our UK business over the next decade.
Great to hear from Romi there. So, what are your initial thoughts on this, Rachel? Is this a good thing? Is this a big challenge for two kind of very established UK brands trying to crack the US?
Yeah, I mean, obviously a huge challenge. Monzo have tried this before, didn't quite work out, and I really appreciate that they rolled it back, and that's what we should see from good product practices, good businesses. I think I was on the podcast a while ago talking about rumors of Capital G getting involved, and so I think it's a really smart move from Alphabet on one side. I think Monzo are a great company to hang your hat on, especially now moving into the US, having failed there once before. I think they've learned a lot, particularly by the appointment of their US CEO. They've tried to bring in a lot more US expertise while they enter the market, and I think that's so critical. Really interesting to see the parallels in the approach. So from Monzo's perspective, just going from the ground up, from PensionBee's perspective, trying to think about a more partner-led approach, which I think is another way of trying to grab that regional expertise when you're expanding into a new market. I think when it comes to who might come on top, if there is an on top, I'm not sure if they're directly competing here. But I definitely think we always talk about the US fintech ecosystem from a retail perspective. We know that their money management, budgeting, they have a lot of tools out there. Clio are hugely successful there and had to roll back operations in the UK. And so there's still a lot of disparate services and therefore a huge opportunity for Monzo. And I'd love to see how their app rolls out there now they've got all the functionality that they have here. But on the flip side, I really think it's a cool problem to solve for pensions in the US. Like there's a huge DC market out there. And so I wonder, it's particularly with the US pensions market and the complexity around 401ks, I would love to see what this looks like for PensionBee. I think it's a really, really exciting step.
Yeah, I think it will be interesting to see. And they've been obviously a little bit secretive about who their partner
Yeah.
is, whereas Google is obviously very much shouting about who their investor is. So I think, yeah, to your point, it's a very different approach, but like both have the potential to work. Let's sort of see how this plays out. Phoebe, from your sort of investor perspective, what are your thoughts on this, particularly the sort of Google team up with Monzo? How does that sort of help them in the US market or maybe just more broadly, having a backer like Google?
Yeah, I think I guess sort of two thoughts on this. I think one is like the sort of why the US is attractive is sort of one, and then sort of capital investment. I think for one, like on the US, I think that both like PensionBee and Monzo, it's super exciting that they're able to do this either via, partnership or sort of acquiring a banking license or the traditional routes. I think though, like you have seen, is always important to like proceed with caution as well. As you've seen with Monzo, Revolut withdrew their application for US banking license last year, and 26 also left the US as well, that it does come with its own challenges. So the US, whilst it's a very big market, is still very regional in terms of each individual state have their own sort of local practices, local needs, and sort of different customers that we have here in the UK or elsewhere in Europe. And the second part is like what you're talking about in terms of market entry can be quite challenging. So this partner versus acquire a banking license approach is sort of often difficult to find the balance between both of those, whilst also acquiring the right type of customers, localizing your product, etc. I think in terms of Capital G's involvement in Monzo, obviously that's very helpful. And I think that now the head of Monzo US was like the former head of product for Cash App. So obviously there's a lot of familiarity with the exact type of customers that they want to acquire and like the ecosystems that they want to build around their product. But I think similarly, what makes a great investor in a company is really not, you want to be at the board, want to be present and be a great strategic partner for the management team. But I think it's always important to make the distinction that you are not the management team. So management should still run their company and sort of you should leave them obviously to do that. And that is obviously their day-to-day job. But what makes a great board member and a great team is really network. How can they introduce them to the right people in the US where Capital G will be really vital and important, and also strategic support and advice, which they'll obviously have in abundance. So I'm sure it'll be a very great and fruitful partnership for them.
Yeah, I definitely think from like that networking and helping them embed, especially in the US post SVB regulation, is really tightened on fintechs, especially smaller fintechs as they enter the market and the capital requirements that they need to operate. And so actually having, you look at 5 billion, you're like, that's huge. But actually, I think that size of investment is needed now to step into the US for smaller companies, although I don't know if we could call Monzo such a small company anymore. So, maybe they are the right size to manage that kind of regulatory scrutiny.
Are they small by US standards though? Like, are they still a very small fish going into quite a large pond? Like, might they struggle in that sense to kind of stand out?
I think the retail market in the US is, for me, absolutely sewn up. Like, I think this, from Monzo's perspective, is possibly a strategic move. There's two possible arms for that. One is working with Google. Google is the biggest bank that isn't a bank. No, Apple's the biggest bank that isn't a bank. Google's a close second. Monzo wants to IPO. Historically, British companies, European companies like to go to the US to IPO. You get higher valuations, there's greater liquidity. Is it a strategic move from that perspective?
Okay. So you think it might be more about the end game than actually the sort of the products and services and customer build that they're really looking for?
For anybody who knows me, who knows I'm always skeptical about companies moving to the US, to echo Phoebe's points exactly, America is not America. The US is not the US. It's entirely regional. It's almost like saying we're going to expand into Europe. Spain is different to Germany, is different to France, whatever else. Scaling internationally has to be done in the right way and the way that's most appropriate for the company in question. Now, Monzo's obviously learned from what it did last time and obviously what didn't work there. To have a second go at it is very, very bold. And for me, that means they must have a better idea of what they're doing, and they must have a strategy they're not telling us about now. I could be completely wrong. They could go over there and they could completely overtake Chime tomorrow. But I really don't see that happening. I really see this as a strategic play. I'm just not quite sure what the strategy is yet. For PensionBee, I think it's slightly different. I think PensionBee have a technology that they've proven, which is the rolling up of pensions. So you've got, anybody who's ever had an employer pension, you could have 5 of them by the time you're 40, and then you've got to find them, and then you're paying fees on all of them. And PensionBee's brilliant proposition is bringing them all together, putting them in one place, and making it easier for you to manage and basically making it more efficient. That can work with IRAs. Like, I can see that working in the US. I can see that technology working, and they've also got in with a partner who presumably are handling the licensing, would be my guess on that. With Monzo, I'm not sure. I'd love for it to work for them, but I can't work out what they're getting at yet.
Okay, food for thought. I guess hopefully we'll find out as they kind of roll that out. But Sarah, kind of with your sort of new hat on, looking at kind of regional opportunities for fintech and so on, do you think this is a good thing, kind of putting British fintech on the world stage, or could it actually have a detrimental effect on the kind of localized use of these products and services?
I mean, I'll go back to the point I've made previously. Scaling is a good thing. It's something we help our members to do. It's something that almost every organization wants to do, but it has to be done in the right way. And I don't think it's a bad thing for, look at the success of Wise internationally. Like, that's done a huge amount for the UK fintech market, the huge amount for the UK fintech market's reputation internationally. So that doesn't hurt. And I don't think, if you get it right, it's not going to take resources away from the UK and Europe. If anything, it's going to bring more resources into the UK and Europe. Historically, the big US investors who write the really big checks, they haven't looked at UK and European fintech companies as much, because they have a glut at home, or they don't see them as being perhaps of the same quality. The more we have that makes a mark internationally, the more we will, in my opinion, draw resources over, because these big investors will start to see Europe and the UK as places that foster and breed brilliant companies, and it will draw investment and talent to the UK. I think it can only be a good thing, but I would say that the decision to scale cannot be taken lightly, and it has to be done, particularly if you're a bank, particularly if you're going in with that level of regulation, has to be done carefully and thoughtfully.
And Phoebe, what would you add to that? Is there anything that sort of these UK fintechs can take to the US that they don't already have? Are they sort of solving a problem over there, or sort of bringing a new lens to the opportunities over there?
Yeah, I think it's really a mixture. I think in some ways, as Sarah was saying, we have evidence of really great sort of fintech success stories. So that Wise is one, Klarna is another one, not from the UK, but from Europe. So I think have really proven the ability to scale into being truly international companies. I think in terms of what they can bring, as I mentioned before, it's really about solving like a specific use case, because the market is so big. If you go in with a strategy like a lot of people in the US have done, just like, oh, let's just supplant our product over to the US, throw loads of money at customer acquisition, hopefully it'll work. That almost never works, and sort of it really accelerates burn and the profitability profile, which a lot of investors are obviously more focused on. So I think it's still an exciting opportunity to do that. I think you have to go with a very considered approach to why now, why should you scale now, and what is your strategy to scale in particular markets and then expand outwards.
And I definitely think PensionBee have nailed that marketing point on the head, because part of the reason they're going out there is to use their partner to help them accelerate their marketing efforts. And I think that's so crucial, understanding that go-to-market isn't just about having a good product, it's being able to communicate it to an audience in a new region. I think they've done that very well, and it's the right approach. So they're targeting a more specific problem than Monzo. Like I saw a stat, I think it's the Center of American Progress, where households are paying like up to $600 a year in fees on their 401ks. Like, you don't need to be paying that much fees for something that you're trying to draw down on much later in life. So it definitely, you can see the clear strategy with PensionBee. Sarah, to your point, trying to work out what Monzo's plays. Maybe they just come out with an investment app. Maybe they do something more specific or niche that we haven't thought of yet, as opposed to their broad fintech offering?
I mean, to be clear, Monzo, I bank with Monzo. I love Monzo. You know, they have got customer service, they've got customer experience completely nailed. You know, they are absolutely brilliant. My question is simply, how do you convince people to switch to you if they've already gone to a digital only bank? And it may be that they've got something that I just don't know about, and they've got an amazing marketing scheme, and that's going to work brilliantly for them. You know, I would love it for Monzo to go there and be the biggest digital only bank in the US. That would be amazing. I know I'm not an investor.
As you mentioned before, there's a lot of sort of other companies already doing similar things. A lot of competition, as you say. Like, the difficulty is convincing people to move from whatever they're on already to come and join you.
I think the other interesting thing about the US is that the incumbents are actually pretty strong. So like JP Morgan Chase, Bank of America, Citibank, it's not the same as but in the UK. I think the incumbents are a lot worse in terms of their ability to build truly digital banks for things like having more transparency, ease of use, etc. That's how Monzo was able to gain like such share, particularly among millennials. But yeah, the US, the incumbent banks are definitely stronger and are pretty innovative and are really strong on their digital offering in particular. So that sort of adds, you're not just competing versus a Chime, you're also competing more versus the incumbents than in other markets.
Yeah, that's such a great point. And sort of to your point, the pension offering, opportunity in the pension market feels like PensionBee have got more of a space to play in potentially than Monzo in a slightly less crowded market. Where, you know, there's obviously room for disruption.
Yeah, but I mean, pensions, if you think your like your banking app is sticky, your pensions are notoriously sticky. More so because they're so intangible. Like, I went to use PensionBee actually, and I was like, where is all my pension documentation? I don't know how to log into all my pensions. How do I consolidate them? Like, it's a really difficult process to get started. I think that is different in America because I think your 401k is a slightly different setup. I can't claim to be an expert on it. So I think there is some room to shift, but it's still, the barrier to change is hard. The value of change for pensions is just so much higher. And I think that's what makes it seems more straightforward, at least at surface level.
Fantastic. Well, I think we will obviously be keeping an eye on both of these companies and championing them as they continue to expand in the US, and kind of, I'm sure we'll be covering more and more on both of their initiatives in future shows. But we're just going to take a quick pause here. Back very shortly. Welcome back. Before we get into the second half of this week's news show, a note to go check out our most recent Fintech Insider Insight show. In this episode, 11FS CEO David Brewer introduces some of our recent spotlight conversations on AI with industry experts from Microsoft, HSBC, and SAS. AI innovations are happening at a rapid pace, and so we wanted to find out from those on the front line, how are advancements in Gen AI impacting financial services, and what is the potential? We share two of our best interviews, and if you like what you hear, you can watch the whole thing on our YouTube channel, as well as loads of other exclusive content. So go check out that podcast in our podcast feed. It's the one just below this one. Now let's get back into the news. And our next story comes from Reuters. JP Morgan joins France's payments network CB to skirt Visa and MasterCard. JP Morgan Chase announced recently it will be the first US bank to join French payments network Cartes Bancaires, which, apologies for my terrible French accent there. This means that by the end of the year, JP Morgan's merchant customers, which includes some of the biggest firms in the US, can process payments via CB. This creates a domestic rival to bigger payments players such as Visa and MasterCard. JP Morgan said the move was to provide competitive transaction costs, as it is usually cheaper for domestic payments in France to be processed through CB. We spoke with Patricia Brolly, MD, Head of Merchant Acquiring for EMEA at JP Morgan, who told us this.
This has been a big week for us at JP Morgan, and we're really excited for a few reasons. Firstly, if you've travelled to France, you'll notice that the CB brand is everywhere. It's iconic. Most French consumers, over 65% of households, will spend with their CB card every day. And it has a really long established presence as a trusted brand. So, in fact, this year, CB celebrates its 40th birthday. Secondly, we have a long history in France, 900 people and growing. It's home to our continental Europe trading hub, And we're really proud of the investment that we make in the community, including small businesses and non-profits. And thirdly, we have shared values with CB. Our mission is very aligned. It's about providing safe, secure, simple, and seamless shopping experiences for our customers, using the payment method that best suits them, whether that's local or global. And in France, CB is critical. French consumers, and there are 76 million of them. That's, just to give you some context, 10% of the total Europe population expect us to offer CB as a payment method. And for our clients, we can offer them more competitive transaction costs and better performance for their card transactions. So we're really excited. We'll have this available by end of the year, and we're looking forward to seeing our first consumers benefiting from it.
Brilliant. Rachel, you said you've been doing a lot of digging into this story. You're excited for this one. What do you make of this?
Well, it's not this story specifically, more just looking into commercial. But I think I was reading a lot of stats about commercial banks and payments, and actually how it's a massively underserved area. Because if you think for huge entities like JP Morgan, the amount of effort to switch your payment provider is huge. And so actually a lot of payment providers underserve clients like JP Morgan, because they're like, well, you're with us now, you're tied in, you won't change. And so what this story actually signifies is that rates are competitive, and they're trying to deliver a new service to their merchant clients to say, actually, we're seeing a better, more affordable way for you to manage your domestic payments. And so I think really here is what's cool is that we're seeing a huge entity make a big shift, a statement of intent away from Visa and MasterCard, who seem to have a monopoly almost everywhere. Whether this is possible in other regions, I'm not as sure, because I think it depends on the other payment providers out there and their ability to handle a client of this scale. But I definitely think it just it's another indicator of JP's very innovative marketplace plays. I feel like they are, as a bank, they've always leveraged having better services, like acquiring partners where needed to serve their clients better. And I think this is a great example of that, where they've said they've been able to identify a problem, but make a huge strategic transformation in order to deliver better value to clients. So from my side, I think it's a very smart move. I don't think they could have done it sooner, because it's huge. So to build a business case for something like this must have been an incredible shift from the JP team.
Yeah, I think in the conversations that we've had, even on some of the media properties that we've worked with them on, they're really pushing into the EMEA market. They really want to be known as a sort of European payments expert. Like they're trying to shake off, as I understand it, this kind of reputation that they're just a US bank, because they are global, and things like this kind of really show that they're trying to make a mark on the European payments landscape even more than they already have done. Sarah, what's your take on this? How significant is the move like this?
Well, it's interesting. So if you look at, as was mentioned in the soundbite we heard, JP Morgan's relationship with France goes back over 150 years. It goes back a long way. And the US and France have financial ties back to the 18th century. One learned from the other's revolution. They have history. And so JP Morgan has had quite a significant presence in France for quite a long time. The fact that it's managed to join CB, I think it's only the second international bank. There's only 11 banks on the membership, and HSBC was the first one, and JPM is the second. So I think it makes sense that they've started with France. This isn't that unusual. Most people will know, well, not most people, many people will know that across the world, a lot of countries have their own processing, their own payments networks. So if you go to the Netherlands and you have a Visa or MasterCard and you try and buy something in a supermarket, 9 times out of 10 that won't be possible, because you'll need a Maestro card, which is the local payments network in the Netherlands. I say this as somebody who has been denied the ability to purchase Stroopwafels at supermarkets at Money 2020 year after year.
Me too, every year.
Hugely problematic. And they don't take cash either. So, it's really cutting us off from the Stroopwafels. But yeah, it's not uncommon for that to be the case. Australia, they have their own national payments network called FPOS. Now in Australia, you do quite often get cards which do what the JPM cards will do, which is that you can either use them on the local network and that will be cheaper, but if the local network isn't available, then they will automatically switch to Visa or MasterCard. So they're dual branded cards. So this isn't unique, if you like. But I do think it's interesting to see a bank of this size, of JPM's size, to Laura's point, willing to play ball in Europe with the European payment systems. So that's the interesting bit to me.
Phoebe, what's your take on this? Should Visa and MasterCard be worried? Or is this kind of a natural stage of disruption?
Yeah, I don't think Visa and MasterCard should be concerned. I think, as Sarah was saying, I think it's more of a natural step for JP Morgan to increase their presence in Europe. So I know, for instance, JP Morgan Chase, that's now in the UK, expanding to Germany from like a retail banking side. So I think this move is just more to increase the breadth and the depth of their offering for their merchants. And then in terms of like Visa and MasterCard, as you know, they essentially have like a duopoly in the space. You always have some of these local payment networks which have been around for a long time. I think their main concern is, for instance, it's called the Credit Card Competition Act, which might be going through Congress in the US, which is going to try and break up Visa MasterCard duopoly, which it essentially is. They have very high profit margins, and there's a great argument that obviously it would increase more competition in the space if you could break that up. So for them, that the risk of that going through is going to be the most disruptive to their business. That bill essentially allows large banks to allow more choice in terms of what payment network can be used for processing transactions on credit cards. So now if you are a shopper and use like a Visa MasterCard card, the shop or merchant has to go on those networks. Whereas if this goes through, they essentially have choice over what payment networks that they use.
You know, if that does go through, do you think that will open up opportunities in other markets? Because it's also set a precedent of kind of breaking that duopoly and, you know, showing that choice is the way forward.
Yeah, and I think it would empower networks like CB, for instance, significantly more. And I think, for instance, even CB, is not a new network. It's been around since like the 1980s. So I think it would just encourage sort of more of a distribution of some of those fees, particularly in interchange, in new markets. And the impact of that is especially true in the US, where interchange fees are 2% versus what we have in Europe, which is like 0.5% in the UK. So it's really about distributing part of that profit pool.
Which is presumably a good thing for the end customer as well.
Yeah, I feel like we're starting to see more partnerships with these, or at least partnership moves from big incumbents like JP, like HSBC. And I think that actually what we're now going to see a lot more innovation rather than on just products and services, but on how they their distribution networks. I think that's a really critical shift that we're going to start to see. And I think it's really important to your point around, you know, the end customer. Customers are the age of information is here, and like people are starting to read up on stuff. And I feel like there's a new generation that are just so much more aware of fees and fairness, and so that will impact how businesses deliver services as that help to a higher account. And so I think that we're going to see more of these partnerships and more of this flexibility in place to say like, hey, you know, more aggregator services, here are all your options, like pick the one that's suited to you, or actually we're going to say this is most suited to you in this contextual circumstance.
Yeah, that's a really good point, particularly around the sort of partnering on, you know, the sort of next layer down in the stack, kind of not just on the front end, but sort of the behind the scenes that also benefit customers. And the more customers know about that, the more they'll be looking for those benefits as well. Sarah, maybe final word to you. What do you think this means for sort of JP Morgan's European expansion plans more broadly? Do you think we could be seeing more and more of these kind of partnerships in other European regions?
Yeah, I mean, to be clear, this isn't a partnership. JP Morgan has had to go through a significant process to get here, like to be allowed into the clique of French banks, which will not have been easy, and only somebody with JPM's clout, I imagine, could do it, could go through that process. We shouldn't underestimate these national payments networks. They are hugely used, hugely valued, as you say, because they provide better value for the end customers. And my suspicion is that the only reason that JP Morgan would have gone through this process is because it's the only way it can compete in that market, because its customers expect to be able to pay a certain way, and it's decided it can't compete unless it goes down that route. So I suspect when you look at what it does, the rest of its European expansion, it will take them on a case-by-case basis to harken back to our earlier story, like each country is different, each country will have different rails, each country will have different preferences. So imagine, for example, if we wanted to see JPM make a huge splash in the Netherlands, it would try and find a way to get into that Maestro network as well. So I think it shows JPM's intentions, because it wouldn't have been an easy thing to do. And I think it shows the strength of those intentions as well.
Absolutely. I think, if anything, it's almost like obviously, I know there's a huge amount of work that goes into it, but it's also sending a very strong message and a signposting as well as to their sort of future intentions, with this being sort of the first one out the blocks. Another one that we will obviously keep an eye on and see how that develops over time. But if we're going to move on to our next story, this time from City AM, UK Chancellor Jeremy Hunt reverses changes to angel investment rules. So earlier this year, the Chancellor Jeremy Hunt raised the required income threshold to qualify as a high net worth angel investor from £100,000 to £170,000. This move triggered a backlash from over 500 startups, businesses and investors who signed a letter urging him to reverse. They argued that this move could cut off investment ownership protection for angel investors. Additionally, it could result in less funding for startups and disproportionately affect women and minority groups whose downgrade from high net worth status may find themselves excluded from investment opportunities. However, in the spring budget and potentially the last budget before the UK's next general election, Jeremy Hunt confirmed that these changes will be scrapped. We asked our community if this move signals a shift when it comes to empowering female investors, promoting gender equality in financial services. And though 21% agree that it's a big win, 33% of them still think there's a long way to go. Sophie Winwood, co-founder and CEO at WVCE, was one of the champions of this reversal. And here's what she told Fintech Insider just after yesterday's budget announcement.
I could not be more excited that the Chancellor in the budget announced that there would be a reversal of the changes to the angel investment threshold. Myself and many amazing organisations, including Startup Coalition, Hermesa and Alma Angels, petitioned very, very hard to get this rolled back. This culminated in an incredible movement called Invest Her, which ended up having over 2,500 signatures from operators, investors, founders, petitioning to the Chancellor to change these thresholds. 2 weeks ago, they said it could not be done. So incredibly excited to see that they managed to do it. So why is this important? Well, the thresholds were increased so that angel investors had to have an income of 170k up from 100k and net assets of over 425k up from 250k. Now, some analysis that was done showed that this impact was a 70% reduction in female angel investors across the UK, and in some areas as high as 90 to 100%. Now, with VC funding into female founders sitting as low as 2%, we need angel investors to support these female founders at the earliest stage. And so decreasing the amount of founders and also angel investors and also diverse angel investors would have an outside impact on this. So we should be celebrating for 2 reasons. 1, the reversal of these detrimental changes. And 2, the example that if an ecosystem comes together and moves together, change can happen. Now we just got to get our checkbooks out.
Great to hear from Sophie there. Like, she was definitely one of the champions of this reversal. And it's just, as she said, it's just really exciting that if enough people really believe in something, they can make that change and make that difference. Phoebe, as a sort of investor or from an investor perspective yourself, what was your take on this?
The reversal of things like this is really critical to, I think that my answer is sort of twofold. I think one is the need of why we need more women involved in all stages of like the VC ecosystem and why that's important. And the second is really like equality of opportunity and quality of access. So like one is like why it's important that this was reversed is, Sophie said the stats in her message that saw a 70% reduction in female angel investors across the UK. And why do we need more female angel investors? Is because it offers increased sort of diversity of thought, increased access for mentorship opportunities, and sort of further build the network, not only to support female founders, but other types of diverse founders too. So it really starts from like the earliest stage into like how we can even get more people females starting businesses and even women becoming investors. So I think that part is really critical. And I think the other side as well is really increasing diversity within the ecosystem. You need to be able to have, I think in the UK, we're very fortunate in the EIS schemes, etc., are pretty attractive, particularly versus other markets and other economies in Europe. But it's the sort of regional disparities that I know Sarah wants to talk about as well, which are the most significant. And I think ultimately angel investing is very local. Like you invest in businesses that you know and people that you know in places that you know. So I think it's really important that it was reversed to increase diversity and sort of network effects and mentorship, etc. Really in the industry as a whole.
And I think you've teed up Sarah perfectly to kind of give the regional angle to that as well.
Yeah, no, absolutely. I mean, to be clear, as somebody who's worked with WVCE from the beginning, I was horrified by these suggestions on a number of fronts, one of which being, how many women it would potentially exclude from angel investing. But the other impact that I think perhaps wasn't reported on quite as much was the impact on areas outside of London. So London is already kind of where almost all companies that get large sums of investment are based, still to this day, unfortunately for those of us who aren't in London, I should say. But outside of London, for obvious reasons, angel investors tend to have lower incomes because salaries are lower outside of London. That's just the way it is. That is just a statement of fact. And in Wales, we have this thriving angel network. And in fact, they have this amazing initiative from the Development Bank of Wales, which is the co-investment fund. And so that matches funding from angel syndicates. And this is a huge lifeline for our Welsh businesses, particularly our Welsh fintechs. And so the fact that we were potentially going to lose a huge percentage of our angel investors just to this threshold change was going to have a serious impact on our ecosystem here. And to bring up the point about women, here we have the Women Angels of Wales, and this is a syndicate of more than 30 female Welsh entrepreneurs. It's been founded to support women in the early stage investment community. Wales is really trying. It's been founded with the support of the Development Bank, really trying to increase, to Phoebe's point, that diversity in angel investing, to get more people involved in it, to make it, as easy as possible, both for people to get involved in investing and for early stage companies to get the funding they need. All in all, that means that this reversal of policy is a huge relief, certainly to us in Wales, but I'm sure to other people in regions outside of London that rely very heavily on their angel networks to support those early stage businesses.
I saw there's a stat in the Financial Times that says the number of first round seed stage deals in 2023 was a 10-year low of 1,025. Like, that is ridiculous. And this is coming from a government who are saying that they really want to invest in the technology scene and build out our business sector, but actually this is what it takes to build out a business sector. It is based on angel investors form such a crucial part of that. And I find Sarah, you nailed it on the head. I find it so short-sighted that they are setting this arbitrary figure, usually based on inflated London salaries. Like 100k is a ridiculous amount of money for anyone to be paid. And if you have that amount of money, it's because you have ascended to expertise in your field, and therefore you are in a position to be able to support these businesses. And I recognize the government's impetus to bring stability. Like, we don't want people who don't have the knowledge nor the funds to be able to invest in startups and leave their money in for a long time. Like, the risk to startups is huge. I just don't see that many people earning 100k being like, oh, actually, can I just withdraw that investment? And also that's what terms are there to protect. And so for me, I found it a very bizarre move that it was even announced in the first place. It doesn't feel like it aligns with any of the UK's ambitions with the startup scene, nor does it particularly, it just doesn't seem to reflect the sense of the startup ecosystem at all. So I'm really glad to see these changes reversed, because it does feel like we're talking a lot about women, but also the ethnic minorities who are just immediately priced out as an angel investment, when already the fintech scene specifically lacks that diversity. It's really important that we're taking those steps to protect that.
Yeah, absolutely. And the fact that the proposed jump was almost 100% jump, like it wasn't even an incremental gain, it was enormous. Did, to your point, just sort of almost feel like it came out of left field, and then, I mean, not to take anything away from the petitioning, but almost as quickly rolled back. So how invested, pardon the pun, were they in making that change in the first place? Because as we say, having more people able to invest increases the playing field, increases the type of businesses that are invested in as well. So sort of female investors, not always, but tend to invest in female-led businesses. And you take that away, that obviously has a detrimental effect, as both Sophie and Phoebe have outlined. So I think generally it just seemed very, very short-sighted. Phoebe, what would be the kind of, if this change had gone ahead, just hypothetically, if you still wanted to invest but couldn't as an angel because you weren't, at that threshold, what would be your options? What can you do if you do want to kind of make that impact and kind of influence the ecosystem in some way?
Yeah, on this one, I think it's sort of twofold. I think one, you can always do, in some ways, don't quote me on this because I don't know if this is completely true, but on the sort of, if you're like friends and family of, like if someone's doing like a friends and family round, you can obviously still invest your own money in someone's company and don't necessarily have to be under some of these regulations. But I think aside from that, I think it's really just about continuing to support the ecosystem. So it's things like crowdfunding campaigns. That's why you have other forms of access which aren't necessarily venture backed. So I think that those are sort of things that I say. I think a lot of these regulations they're talking about is who can access these like EIS schemes, where you get income tax relief. So you might be able to participate, but you probably won't get access to those schemes. And if you sort of break some of these rules for the Financial Promotion Act, there are obviously additional consequences associated with that. But that's more for like larger ticket sizes.
So by and large, this is well, in a way, I was going to say it's good news, but actually the proposal to change the threshold probably should never have happened in the first place.
I would actually have liked to have seen it go the other way and for them to make it easier to be an angel investor, because to the points that have been made today, you tend to, if you're going to be an angel investor, you tend to invest in things you're passionate about, and those tend to be things within your community, whatever you define your community as being. Could be a community of women, it could be the community of Wales, it doesn't matter. And so you want to support those businesses and you're passionate about them. And I don't think it should be made more difficult to do that, especially as so few people understand angel investing as it is. So making it harder was just going in the completely wrong direction, to Rachel's point, as far as I'm concerned. We should be making it easier for people to invest money where they're passionate. Not irresponsibly, absolutely, there need to be guidelines in place and there need to be rules in place. But I really think, to Rachel's point, if this government wants to support businesses, and any government, actually scrap that, any government wants to support businesses and promote early stage businesses in the United Kingdom, they should be making it easier for people to invest in those businesses.
And it totally speaks to the point we were all talking about earlier around confidence. Like, we are trying to empower people with knowledge, not just with access. We're trying to give people an understanding of what that looks like. And that could be investment in ETFs, or it could be angel investing. And I think, bringing it back to pensions, pensions aren't sufficient for people, and people are looking for other ways to grow their income, but also to put their money against things that they believe in and they value. And that's why there's a lot more like climate and green portfolios that people are looking to invest their funds into. I think that startups that are truly pursuing people's passions and trying to make a difference, it's the same principle. And I completely agree. We should be trying to make that easier, but we start with knowledge so we can build confidence, so people, when they get to that earning threshold, are able to say, yep, I'm ready to do that. And it starts much younger than we are doing now. Like, we're not teaching people about finances, we're not teaching people about investment, and we're certainly not teaching them about starting businesses and what that looks like and how you can get involved even if you don't want to be a founder. And I think it feels like something you only learn if you stumble into the industry. And who stumbles into the industry? It's usually the same old people. Amazing that we're all sitting here on this call, but it's not usually a room like this. And so I think education is just, it's so tied to all of this. And then the next best thing is, let's, keep the threshold where it is, ideally lower it, but let's start to push, if the government really wants to see the fintech or startup ecosystem bloom, let's start to get more education around it and building awareness.
Absolutely. Well said. I feel like we could debate this one between us for a very long time, but unfortunately I have to move us on. So now we're just going to do a quick look at some more click-worthy news this week. Rachel, what do you have for us?
Yeah. Indonesia fintech Wagely makes bank while helping the unbanked. So this is from TechCrunch. Wagely made a name for itself through its earned wage access, which offers salary advances to individuals in Southeast Asia and removes the dependence on high interest payday loans. This week, it celebrates $23 million of extra funding as it looks to diversify its product offering. As well as salary advances, Wagely is now also building out a financial wellness platform and doubling down on its effort to improve the financial health of its 500,000 users. Even more impressive is Wagely's investment coming at a time where there's a major funding downturn in the region, with data from Indonesia's Financial Services Authority showing that startup funding dropped by 87% that year. And so if we just focus in on that last startup funding tends to drop when economic climates are really tough. And so if we're talking about the impact on startups, really, we need to be thinking about the impact on consumers and just how squeezed they're feeling. I think particularly in Indonesia and in working, a lot of the workers sit within underbanked or lacking credit history, but they also sit in that segment of people living payday to payday. And so actually people are seeking alternative means of employment and trying to find other jobs to try and pad out their income. This is just a way for employers to help reduce attrition, keep employees, but also help reduce the reliance on debt cycles within the region. And so that's what Wagely partner with a lot of employees to try and build financial wellness. And so their move to not only help people get access to credit in a responsible way that's aligned to their earning, but also equip them with more education, I think is really important. And earned wage access isn't something that we're new to. We saw Monzo's get paid one day early, really making a big splash in the UK. But actually there's a lot of providers and a lot of employers who offer this. And so they're offering a really great service, and it's great to talk about someone launching a product that's not just about something sexy in fintech, but actually something that's really impactful too.
Thank you. And our next story comes from Finextra. Top fintech chiefs join Innovate Finance's Unicorn Council. The new Unicorn Council brings together CEOs and founders of the UK's largest fintechs. It is designed to provide key policy recommendations to the government and ensure the UK meets its investment and growth targets over the next 10 years. It also provides an umbrella forum for UK unicorns across all sectors to create a more effective, unified voice on behalf of innovators and business leaders. Janine Hurt, CEO of Innovate Finance, says, in the last few years, UK fintech has shown resilience by maintaining its position as a global hub for investment, second in the world behind only the US, and maintaining the leading position in Europe. So firstly, cool name, Unicorn Council. Whether all of the companies within it are actually unicorns, I'm not so sure, but, still it's a cool name. I think initially I was maybe skeptical about a sort of another lobbying group. However, everything that we just said on the story about the Chancellor, sometimes lobbying does work. And equally, I think maybe it's a savvy moment in time to do this as the UK is moving towards a general election. A lot of the growth of fintech has happened under the same party as potentially that could change. I think maybe putting a lobby together to make sure that fintech is still, it's still there, it's still being championed, whoever is in charge, is probably a good thing. But I'd be interested to see exactly what it is that they are going to lobby for. So they're trying to maintain a position as a global hub for investment, second only behind the US. Is that enough? Do we want to maintain second place, or should they be trying to take us into first? But obviously trying to maintain a lead in Europe. As I say, let's see how effective this is. But, headline grabbing just for the name alone, Unicorn Council, I think. And now it's time for the and finally section of the show. A look at something more lighthearted from this week's news, and actually in this week's case, heartwarming as well. So this was on BBC News. Southampton-based dementia debit card wins $125,000 Dragon's Den investment. Sibstar is a debit card and mobile app to support people with dementia and was founded by Jane Sibley while caring for her parents who both had dementia. Launched in March 2023, it helps families safely manage everyday spending and tackle an increased exposure to scams and fraud. Features include daily and monthly spending limits, card usage restrictions, and real-time notifications. We were joined by Jane on a previous episode of Fintech Insider where she explained how it all works. So we'll put a link to that in the show notes so you can find out more. But her sort of passion and lived experience of what she was going through was so apparent. So please do check that out. Jane and her business partner, Martin Orton, pitched Sibstar on BBC business show Dragon's Den, where entrepreneurs asked for investment from a panel of successful investors and business people. After impressing the panel, they left with £125,000 of investment. And since appearing on the show, social media follows doubled overnight and inquiries soared by 1,000%. This is a great feel-good story, right? Rachel, what's your thoughts on this?
I love this. I feel like there are so many like people who are on Dragon's Den and it's like a new wellness product or like, you know, another deodorant. And I'm like, yeah, but like these feel like products just for like, I don't know, like it's just like some, like me scrolling on Instagram, like as a middle class person, be like, oh, like what weird thing shall I buy next? And I feel like this is what I want Dragon's Den to do, because not only does it give investment, but it gives that visibility that is just incredible for such banks. And I've heard so many stories like from friends of friends who people, not even just from a dementia perspective, but people who are elderly or don't have like full visibility or knowledge of their finances, and they fall into scams and fraud just because especially digital services have changed so much, and like it's so much to keep on top of if it's already new to you, and so more protection is so important. And I just love to see more inclusive design coming front and center and getting more visibility. Like it's a shame that she has to start her own like banking app to do that. Like it should just be in Monzo or whoever. Like but I really love it, and I think it's, you know, sometimes I can go really hard on fintech and banking and say that we should do something different, but this is it in action, right?
Yeah, absolutely. I think, yeah, to your point, like she had to make it herself because it didn't exist. But the fact that now people know that it does, she's getting all this investment, she's getting all this attention, can only be a good thing to highlight the challenges that people in her and her parents' position faced. Phoebe, what's your thoughts on this one?
Yeah, again, loved it. I think it's great. Like I remember I saw it on TV, and I think it's just really refreshing. One, I guess Dragon's Den are the ultimate like original for me when I was younger, business angels, is seeing sort of a very different type of proposition on that show. And then, as you said, I think what makes fintech and other types of technology great is really to be able to build inclusivity within those like ecosystems. It's not just like solving needs that I have as like a millennial, it's solving needs for everyone. And I think their ability to do that is amazing, and sort of really should be encouraged as we think through like other areas of innovation within the economy.
Yeah, no, absolutely. Brilliant, you know, news that they got the funding from Dragon's Den. It makes me sad that a lot of these sort of, it's a very trite term, but fintech for good propositions really struggle to get investment because a lot of investors just don't see the benefit, which is a shame because they can deliver great returns financially, but also obviously in terms of, you know, ESG goals. We recently partnered with the London Institute of Banking and Finance to deliver a sustainable fintech leadership program, and it was heartening to see how many organizations got on board with that, both large institutions and fintechs. And I think people are coming around to the idea that innovation doesn't have to just be for how can we make more money, it can be how can we make people's lives better. And so ESG doesn't just have to be about green. I think a lot of the time it gets, you know, we talk about planting trees, and yeah, that's great. That is one element of it. But I think this element often gets overlooked, kind of the S, if you like, in the ESG. And yeah, so it's brilliant to see companies like this making headlines. And it's also brilliant to see more and more investors and large financial institutions taking this area seriously.
Definitely. And I think it's just nice to see it on like mainstream TV as well. Like how often does sort of fintech get mentioned unless it's sort of on like a news program or like, dare I say, like a watchdog or something, like to sort of see it championed in a place where, you know, it's not normally found. To your point, it's more kind of consumer brands and products. Like, I think that's just a really nice part of it as well.
Yeah, and also like the beautiful thing is, so this investment, what's the purpose of it? What's she going to do? The next step for Sibstar is trying to expand across different, more underserved groups in society. So like this is just shows like more investment into services like this means further reach, means more impact for the rest of the community. So yeah, I just think it's such a success story, and two female entrepreneurs investing and showing what it looks like, and helping with that education piece we were talking about too.
Yeah, I think we've kind of come full circle of everything that we started talking about at the top of the show. It has been suggested to me to ask the question, if you were going on Dragon's Den, what would your invention be? Any takers for that one? Anyone sitting on an idea you want to pitch to Stephen Bartlett and the gang?
I mean, I just really love my mum's cooking, and I want to launch her into like general society so everyone else can also enjoy it. But I'm not sure you can go on and be like, hi dragons, meet my mum, she's going to cook you the best meal you ever had in your life. I'm not an ideas person, I'm a delivery person. Just tell me, someone else must have vision on this group.
Oh, I have brilliant ideas, but I'm not telling you. I'm going to keep them to myself.
No. You're already submitting to go on the show. That's what it is.
The patents filed. That's what I'm saying.
Phoebe, any budding Dragon's Den pitches you want to share?
Oh, a tricky one. As you said, like it's very consumer brands led. I don't know, maybe it may be something. I think we haven't mentioned AI at all in this podcast. I feel like that's something you would have to bring to it. So maybe like I don't know, AI personalized trading platform, something like that. So consumer, scalable, and brings in AI, which we haven't discussed yet.
That's actually probably a record that we've managed to get through the entire episode. The only mention of AI was me and Natalie. Well done, everybody. And on that note, that wraps up this week's Fintech Insider News. Thank you so much to today's guests. Where can people find out a bit more about you? Starting with you, maybe Phoebe.
Yeah, so find out about me on Inovia.vc website or on LinkedIn.
Sarah?
So you can find me on LinkedIn. If you are a Welsh fintech or a fintech who would like to come to Wales, then you can find out a lot more about Fintech Wales on fintechwales.org.
And Rachel?
Here at 11FS, or on LinkedIn, I'm Rachel Pandyan.
And as for me, you can find me, Laura Watkins, on LinkedIn, or of course all of our many, many episodes of Fintech Insider, hopefully just below this one, in your podcast feed. And thank you so much to everyone for listening. Join the conversation on social media or email podcast@11fs.com. Thanks very much, everybody, and goodbye.